Hey guys, what's up? It's AB Trades, and I was requested by someone to do a video on learning how to read the tape, which is also known as the level 2 and the time and sales on a stock. So knowing, reading how to read the transactions of who's buying, who's selling, how many shares, and etc. It just the tape or reading that specifically of a stock is what is known as a leading indicator versus a lagging indicator. So to explain what that is for example like a moving average or an exponential moving average or VWAP or just all the indicators that we use such as MACD. They're all lagging indicators because they're based off price. They use price and volume and some equation to determine what that actually is. What the tape is the tape is showing transactions that has gone through. It shows how many people are buying buying shares of a stock at a certain time, exactly when it happens. If they're selling into the ask or they're selling into the bid, which I will explain later. And it just shows what is happening immediately. So it's known as a leading indicator. It's showing what's happening right then and there before the chart even adjusts for that. You can see it happening in the tape, in the transaction list. It's like reading a receipt as it's printing of what is happening in the stock. I am not an expert at reading the tape. I'm nowhere near an expert. I know enough to get by. I would really love to learn more, but one of the top experts I would believe in reading the tape is a company, a proprietary trading firm based out of Manhattan called SMB Capital. They have an SMB blog and is written by Mike Bellafiore, who has written a few good books such as One Good Trade and the Trading Playbook. I've read One Good Trade, and I will attest that it is a great read for any trader, inexperienced or novice. I will include the link to the review video that I did once over that book, and I will also leave a link below to this blog that I'm going to be referencing to teach you all about this subject. Okay, so let's first mention what is a bid and what is an ask. So if you're doing this on the Thinkorswim platform, you go and you can click on here, you can click on time and sales, and you can click on level 2. Okay, so the level 2 on the left side shows the bid. Let me pull this up for you. Oops, my B. Shows the level. Come on. I guess you don't like me today. That's okay. So the left side is the bid. The right side is the ask. The bid is everyone who's buying. The ask is everyone who's selling. So let's say you put in a limit order for 171.92, your order will show up here along with everyone else's, saying that, hey, there's someone who wants to buy 500 shares at 171.92. That is the buyers. These are the people who want to buy. Ask are the people who want to sell. So when I reference that and I say they're hitting the ask, that means they're hitting the people who are selling. They are buying from the people who want to sell. There's always a difference in price from the bid and the ask, from the buyers and the sellers. For example, the ask here is 172.29 and the bid here is 171.92. So the difference is around 40 cents. The reason why the difference is so big is because right now we're in pre-market. The difference is a little less during the actual trading because there's a lot of liquidity in the market. The more liquidity, the more people buying and selling, the closer that bid and ask spread will be, which just helps you as a trader. So the bid and ask price is always different because if you're buying something, you want to buy it at a cheaper price. If you're selling something, you want to sell it at the highest price that you can get. So usually the ask is more than the bid, and I hope that makes sense if you're just thinking about common business and supply and demand. You want to buy it at the lowest point so that you can sell it at the highest point. So the ask will always be higher than the seller. The ask will always be higher than the bid. Level 2 is the time and sales. This shows the time, the price, and the number of shares they are buying. This will keep printing every time a transaction goes through, and it just keeps going and going and going, so you can read this. This is what is known as a leading indicator because it will show this, and then the chart will start to adjust. Yes, it moves fast, and it takes a while to develop skill to read the tape effectively. I've know that S&B traders, they can sit and watch the tape like a movie. That's how they learn it. They don't need the chart. They don't need anything. They can just watch the time and sales. Now that is ridiculous, but it works. And it gives you a huge edge in trading. But now I want to discuss, okay, yes, you can watch the time and sales and stuff go through, but how do you know what to look for if you're going to be a buyer or a seller? So that's why I'm going into this. This right here. So his blog, if you email him and you ask him a question and you think it's worthy of being on the blog, he'll answer blah, blah, blah. So he compiled this for reading the tape. Okay, if you want to go long, which means in our sense is buying. So for options trading, that's buying a call contract or selling a put contract. Bids are stepping up, which means if you have a bid at 171.90, the bids are starting to go to 171.92 to 93 to 94 to 95. It means people are willing to pay more, and that of course means that the stock is increasing in price. Most transactions are on the ask. What does that mean? It means that people are buying from the sellers. They can't get enough of these shares. Think about supply and demand. The demand is there from the buyers, so they will buy it from whoever they can get it from, because that's how much that they want to buy, which means they're buying straight from the ask, straight from the ask, straight from the ask. Then on the ask offer, so that means on the bid, where you can see the number of asks you have, or how many people that are trying to sell shares at a certain price is low. So let's say we only have 20 sellers and we have 100 buyers. That obviously means supply and demand. The buyers are in charge. The buyers want contracts, shares, and the buyers are after it. They are attacking those sellers, and that is what is making the price go up. Buyers holding the bid. That means the bid is strong. We have a lot of people who are trying to hit the bid and buy these shares. We are having an uptrend, which means higher highs and higher lows. Big prints on the ask. Ask spoofing. Ask spoofing is when someone puts in a large order on the ask. So you see like 2,500 shares they want to sell at a certain price, and then when it gets close to that price, it disappears. They just put that ask there to scare people away from trying to buy it because there's a huge seller there, when in reality there was no seller there. They were just trying to scare you from bringing the price up that high, but it went and it disappeared. That means that there is no one there to actually hold down the price, and the buyers will keep driving it up. Low resistance to go up. SPY is higher. SPY is a market indicators, the S&P 500 index, and if that's if the market is going up, more than likely every other stock is going up well, and it will just help in your favor. Sector higher. So let's say you're trading X, which is U.S. steel. If steel and metals are going, like that whole sector is doing well, most likely X, the ETF of U.S. steel, will go higher. Lack of downticks, meaning that we're not going down much, but we're going up, right? So up candles. Buyers accumulating. Again, just on the bid, we have a lot of buyers. Time and sales accelerating, but price does not go down. Blah, 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 blah. I hope that all makes sense with the long. I know I'm talking fast, but if I don't, this video will last forever. I see videos on YouTube going at least 30 minutes just trying to explain this. That's why I'm going to link this below. Okay, now if we're going short, which is short selling, making money on the way down. For us as option sellers, that means buying a put or selling a call. Okay, ask are stepping down. So bids, you know how they're trying to step up. Well, ask are stepping down. So they're slowly selling. So they want to sell at 170, 190. Now they want to sell at 170, 89, 87, 86. That means it's going down. Most transactions on the bid. That means that they are selling from the people buying. It's hard to explain exactly, but it just means that the people who are buying, they're selling from them. Okay, because we talked about how the bid will be lower than the ask. So the people who want to sell are selling it at a lower price because they want to get rid of this stock. They want to get rid of it so bad that they are selling it at a lower price, which is driving it down further and further and further. Sellers hold the ask, which means there are a lot of shares wanting to be sold, and you can see that from here, the ask, which means like the ask is 100 and the bid is 50. That means there are 100 people who want to sell, but only 50 who want to buy. Obviously, the sellers are outnumbering the buyers, so we're going to go down. So this is obvious of a downtrend. We're having lower lows and higher lows. We're trending down. Big prints on the bid spoofing, the same thing as ask spoofing, where the bid has like 2,000, 5,000 shares want to be bought at this price. But the closer we get to that price, the more that bid disappears and goes away, because they were just trying to scare them that there was a support there, but actually the sellers are going to dominate and continue the way down. Low resistance on the way down. SPY is lower, sector lower, same thing as sector higher. Lack of upticks, which means the candles are mainly red, and time and sell is accelerating. Price does not go up. So that's basically it. Right here that we mentioned. It will all be like, you can save this photo if you want, but I will link it below. And he gives 2 examples, so I would like to discuss those examples. So he said, so what if you wanted to do a fade trade in LSN? So let's go to NLSN for a sec, even though this was like two weeks ago. Let's see how long this takes. Phone, too many texts. Okay, that sounds really fun. I don't know. Did you know we get closer? No, just don't come. With the community theater, you just purchase your tickets directly from the theater. It's cheaper to call during office hours, more than one. Oh, theater, blah, blah, blah. Make sure they know you're a student and they'll give you a discount. Cool. Oh my gosh, I hate this. Whatever. Moving on. Not dealing with this. Okay. So you wanted to fade in LSN on the app for on and open for the gap, squeeze and fill, playbook trade. So your thesis going into this trade is that this news that came out for this stock sucks. It's gapping up too much. It needs to hit a top and it needs to get rejected. So what does that mean? You're looking for the tape to be heavy. You're looking for resistance on the tape. When you're looking for resistance on the tape, you are looking for, actually I should just flip back to this. You're looking for short, you're looking for ask stepping down, you're looking for most transactions happening on the bid and blah, blah, blah. You're looking for these things. Okay, so this is what they saw. We saw on the open around 25.65 area. The offers were heavy and the stock was not lifting this area as it had all the areas at the open. Now we had a setup in our playbook and we see it on the tape to put together a short trade. So they saw that offers were heavy. Offers were stacking up. So like 2,000 ask and only 500 bids, showing that the sellers are there and they're hitting that bid and they are driving the buyers down. Roku reported solid earnings and was a stock in play last week. Let's say you wish to play this for momentum trade on the open. Hey, momentum trade is in our playbook. Roku opens at 54 and holds the offer. Holds the offer means that the bids are staying strong, right? With a buyer paying the offer with velocity. That means the ask, the people selling, the buyers are just buying straight from those sellers, even though there's a price difference, because they want as many shares as they can get as fast as they can. And with velocity means that's happening fast. They are buying straight from the sellers, obviously pushing that up. This buying of the offer with velocity is a bullish signal, as you outlined above. Roku pulls in 50 cents, but then retests 54. So that's just something interesting. If you want to read through, they have a lot more on tape reading and good stuff like that. Again, I'm not an expert, but I can explain it to the best of my ability, and I will later do a video of actually showing it with a stock in play. Alright guys, thank y'all for watching. I hope you learned something. Please like, comment, and subscribe, and share if you liked the video.